Hi everyone, it's me, Wasim Ejaz. Welcome to my course. Today we are covering module 1, that is Trading Basics for Beginners. In this course, we are trying to achieve basically to making trading easier for everyone. By the end of this course, you will be able to understand how stock market works and how we perform different operations, and you will be an expert trader by the end of this course. So today is a module 1, and so many modules are coming already in future that we will study. So let's talk about trading. Trading is it's not that difficult, frankly. I have 7 years experience in this business, so anyone can do it with proper knowledge and risk management. So why Wasim Ejaz? There are different reasons. First of all, I have a complete degree as a software engineer, and I am a registered software developer for the MQL5. MQL5 basically is the company who has developed MT4 and MT5. So anyone who has little knowledge about the trading, they know Forex stock market all over the world. They use broker use MT4 and MT5 platforms. So I am a registered developer for this platform. So if you look, I am verified software developer and I have developed different products with time with high accuracy even. Next question, who can be a trader? That's very interesting. People think trade to be a trader, it's really something very someone should be a tech professional, someone should be very having a good studies or educational background or highly qualified person. But on the contrary, being honest to you, it's completely opposite. Anyone with the common sense, regardless of their age, education, can be a very good trader. Number one, it's a 24 hours market access. It's always open, especially the Bitcoin market, crypto market. It never goes off. Second reason for Muslim brothers and sisters, its riba free accounts are available. Different brokers like ICM and FTMO, if you contact them, they will make your account riba free. Still, you can use leverage, but leverage is allowed, but they will not charge you interest on that leverage. I know it will be difficult to understand and absorb by some people who really don't have knowledge, but I will show you practically because I am doing it from last 7 years. If you look carefully, I have profit 100 467 and profit and loss is also 467. No deductions is anywhere in the whole setup. But on the other hand, this was swap free Islamic account. On the other way, I will show you another account in which if you look history, the total profit is made $5,000. But from $5,000, how much profit it's showing? $4,600 nearly. Reason for the gap it somewhat around $440 is actually taken by the broker as a interest rate. So if your profits remain same, you don't worry about it. It means it's swap free. These accounts are swap. You need to request to the broker that please make my account swap free. These are the swap free accounts. What knowledge is required to trade in the market? Basically, definitely we need knowledge. It's not possible without any knowledge you straight away and you start trading. It's not practically possible. So we need fundamental analysis and technical analysis knowledge that not a part of our this module. In the coming future we will study all these things. So how to do fundamental analysis, which is called FA, how to do the technical analysis, which is called TA. So what indicators are involved, how we look at these things are coming later. We will see these things. So what you need to learn is just when you should buy and when you should sell. In this market, we will buy online and we will sell online. So how to do and how we perform these procedures are very simple, but we will study later. So let's come to the basics of the stock market trading. Did you ever see the brick? What is a brick? It's a unit basically. One unit for the wall, let's say, or the house or the building. This brick has different measurements: length, width, and height. It has different shapes as well, right? So when we combine bricks, what happens? What comes out? The wall. You start joining the brick one by one, and you start making a wall. When there are four walls, then you put ceiling, then you put floor, and then that four walls all together make a room, right? Similarly, if you look carefully in this picture, there are some patterns like this one, black and white, one pattern. Here again, but now black is up, white is down, another pattern with the same color. Now they are side by side. So the way mark wall has a pattern of the bricks, similarly, we have patterns in the stock market. But the unit in the stock market is not a brick, it's a candle. You understand what I mean? The way we have a one brick and we start making and joining the brick, and then those bricks make a wall. Similarly, in the stock market, we have candles. These are called candlesticks. Sometimes I will refer it to candles, so please don't confuse. Candlestick or candle is the same thing. So when we talk about the candlestick, what it has actually, it has a price related with it. A high price, a candle shows four things basically: a high price, a low price, open price, and the close price. There are four things which are associated with any candlestick. The green body, which is here, is called the real body of the candle. And the wicks, these are called shadows and wicks, or sometimes I will say wick, sometimes I will call shadow. So please don't get confused. Wick or shadow both are same. So this is the upper shadow and this is the lower shadow. Shadow happens when the market goes up but could not sustain there and comes back. So then it makes a shadow. So person will when look at it, he could understand market has gone this way but actually came back this side. Similarly, if you have been to beaches, water leaves its marks on the edge of the shore, but actually water is not there, but it is staying somewhere back. Similarly, market has gone to this height, but actually come back again here. When went down, it went to this low, but then come back again to this price. So these are actually retracements of the market, which shows the retracement. Market has been there, but could not sustain that value, could not keep that value, and have been rejected from those levels. So this is the basic information of the candlestick. Candlesticks involve only price, nothing else. Similarly, bricks have length, width, and height in centimeters or in inches. Price we have normally would deal with in USD or pound. It depends on the broker basically. So coming back, candlestick actually shows the high, low, open, and close. Just you need to remember four things. This is a candle, and this candle has two parts. One is wicks or shadow. One other part is a body, real body, and it has high, low, open, and close. Rest we will see later on. So let's talk about the working how we design a candlestick. Imagine this is the price when the market opened. Just like any, you can imagine, for example, any business that opened here, and during that day, this is a 1 minute chart basically. So this 1 minute chart is making a whole complete setup of 24 hours. So when from starting from here till here, it's a minute by minute chart for the 24 hours. So this is a 1 day candle basically. This 1 day candle shows when the market opened here, it went down, 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 reached to this low level, and after that it start rising, rising, rising up, went to high this level, then it came down again, retraced up, and finally when the market closed after 24 hours, it was here. It opened up here, went down, up again, and then closed here. So red line is the closing one, green line is the open, and this is the low of the market, and this is the high of the market. Simple to understand, right? So it's not, for example, if there's a takeaway and takeaway opens with the carry bag, for example, he was having some, they always have some cash flow when they open the store. For example, this takeaway, pizza takeaway, when they opened, they were having 500 USD in their pocket. When they opened first hour, the customers came and then the markets start kicking in. Later on, after one or two customers, there some refunds, some customer comes and complain their pizza was not good or they were not happy customers. So you refunded back some money. When you refund back, you started basically $500 here. When you opened, it was a $500. And when you, for example, refunded $300, so your market retraced to this level. You are negative now, and then you start kicking in your business again. And finally, when you close after 24 hours, let's suppose you were having 1500 in your account altogether, but whole day you have touched 1600, but again some refunds were there. But finally, when you close the takeaway, your net profit was 1500. So you open at 500, due to some refunds you went down, but after all day business you are closing your shop around 1500. Make sense? So this is the way we construct candles. When the market opens and it goes up and close, it makes a green candle like this one. Means you open here, but you closed above. But if you open for the red candle, let's talk about the red candle first. So beer candle has similarly four properties: high, low. But open is on the upside and down is on the other side. We will see in the coming slides why the open is up and the close is down. Right now, you just need to remember four things. Beer candle or the red candle has four things: high, low, similar to the green candle or the bull candle. High was up, low was down. But on contrary, the red candle has open up and low down. Reason? Let's suppose market opens up here. This is a gold chart. Market opens up here. This is a 1 minute chart for gold. Opens here, went up, made a high of, it was around 3370, made a high of 3370. Then market start falling down, 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 down. Went below around 3267 area. Made a low, then start rising up, 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 and closed here. Because the market opened here at around 3355. But basically, at what price it is closing? It is closing at 3318, below the open price. So this is a red candle. We will see at the number line when the market closes below from the open line, it's a red line. When the market closes above from the open, it's a green line. Very simple logic. We will see in the coming slides. Just like bricks have different shapes. For example, imagine this is a complete brick. It can be half. It can cut from the slide. It can cut from the corner. Similarly, in stock market, if it is a complete candle, it can have some little bits up and down. Can have big body, can have no body, or can have smaller bodies. Can have green in either way, green or red. Similarly, candle is not always like red like this or green like this. They can be of different shapes. Let's construct a triangle. Why it is green? Start from the uh, open is down and the close is up. So let's understanding the first of all the green character. Let's suppose this is a number line. Price is always positive. Start from, for example, $1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Price is going up. Market opened at 5. Imagine it, this is a day candle. Market opened at 5, closed at 9. So according to the number line, if you, it's a simple math. When the market goes up, because the numbers are going up. 5, 6, 7, 8, 9, 10. Marking is making profit. Profit will increase in the number. Price is increasing. When the price is increasing, the price moves up. That's why the open is here and the close is here. Right now, I'm not discussing about the low and high because they are same. So we will just focus on the open and close. We will try to focus to understand how to open and how market closes. Highs and lows remain same for both of them. Now, what about green candle? Red candle. Red candle. Now the market was opening here. Previously, the market was open at 5, went up. What if market open at 5 and goes down? Both possibilities are there. So now another day market open at 5. And second scenario, market open at 5 and the price is going down. When the price goes down, so according to the normal number theory, the number goes down here in this direction. So market 5, 4, 3, 2, 1. Imagine market closes at $1. So it will be a green candle. Understanding the simple logic? Imagine the price market is making move up. It makes a green candle according as move according to the number line. If the market goes down from the opening price, it makes a red candle. Anything difficult? If still, we will discuss this later. So right now, just need to understand when the market moves up from the opening price or the reference price, it makes a green candle. When the market goes down from the opening price, it makes a red candle. So now we will see how basically the chart are constructed. Remember again, when the bricks are combined, one by one brick is coming up, they making a wall. Similarly, when candlesticks are joining one by one, they make a chart, and chart represents price with respect to time. So let's talk about how a chart can be constructed. Imagine the candle was opened at price 1, the day market opened at 1 and closed at 4. Imagine it, this is a day candle. Then what happens next day? Because time is never have a gap. I hope you understand this one. Time never has a gap. After 1 second, there's a 2 second. After 1 hour, there's a 2 hours. After 3 hours, there's a 4 hour. Similarly, this is a timeline. First hour, second, for example, there's a first day, second day, third day, fourth day, 5 day. Days keep going. So there will not be a gap between candles. So when the price closes at 4, the next day in stocks and other ETFs, you can have gaps, but in Forex and crypto, there is no gap. So ignoring any gap between two candles, so continuously imagine it, it starts from the same price. So when market open at 1, closes at 4, next day, market is opening again at 4, and we imagine the market is rising again. So when the market rise again and it go up to $7, then your candle will be green again because market is making up moves from first market open at 1, close at 4. Now next day, this is the opening price for the new day. It's $4 and then it moves to 7, and 7 day after market close again. Then lucky enough, market again next day open at 7 and make a new price around 10.2, for example, close again. And then what happens next? Market has made already significant move. People are booking profits. Now, next fourth day, market is opening at 10.2, but actually people are booking profit. They are selling in the market. When they start selling, the market keep coming down, down, down. And the market was closing at, imagine, around roughly $7.2, right? So now market has closed with the loss, means market has traced to down figures from 10.2 it to nearly 7.2. That's why this candle will be green, red, not green. Reason, when the price moves up, market makes a green candle. When the price moves down, market makes a red candle. Simple logic to understand. And when the candles are joining one by one, they make a chart. Simple logic. There is no nothing hard to understand. Then again, people are booking profits, imagine, or there is a panic sell. People are trying to just they sell. We don't want to keep it. We want to sell, or the people are scared of the market. Just imagine. And then from 7.2, they still keep selling. So market is keep coming down. Fifth day again, market is selling and the market is closing. Imagine at $4. Are you understanding the sequence? When the market moves up, it makes a green candle. When market goes down, it simple logic, it makes a red candle. Then the again fifth day the market closed coming down and made a closing around $4 and opened at $7. Now it's a red candle. Then what happens next? Imagine people are happy. Okay, they have bought cheap price because previous price was 10.2. Now they have a cheaper price and they thought it's a bargain and they started buying again from $4, and again imagine the market closed at $7. Now it's a green candle. Why? Because market has opened from $4 and closed at $7. Are you understanding now? I hope so. When the market is making a price movement on the upside, it makes green candle. This is the only thing that you need to understand. And when the market is going down, it makes a red candle. And then imagine from 7 market start going up again, and then from 7 it went up to previous high again. Just imagine around 10.2. So market will make again a green candle, and again market is keep proceeding with the green candle because the prices keep moving up from always from the opening price. Whenever this the today's close price would be the opening price for the next day. Understand this point, please. Market open here, close here. This closing price is the opening price for the new day. Price open again, close here. Now this closing price is the opening price for the new day. It's very easy to understand. So forex and crypto market works like this. So after joining all the candles, this shape can be happen. Here I am just showing a little part. But imagine if the market, if this chart is, imagine it for around 7 8 days or a week days for what, and imagine this one is for more than that. This is a H4 time frame, and one candle is equal to 4 hours candle. We will study in the other coming slides how time frames are checked and how to see. So now different in short, the way when we join bricks, they make a wall. Similarly, when we join candles, they make a chart. Price going down, up, then going down, red candle, then price moved up, then again green candle, and then again market down, red candle. Similarly, whenever the price is moving up, it's making a green candle. When the next hour, for example, this is a 4 hour, after 4 hour, the market is going down again, it's a red candle. Again, the market has closed 4 hours here, went up but could not close, come down, and procedure goes on. So what our goal would be basically in stock market, this is the only chart that people look at it. All the market, this is the only chart that people look at it. For gold, for BTC, and then they try to enter according to their knowledge. When they look at this market, someone can enter here, buy here and sell here, can make a very good profits. Other way around, someone can buy here and can have booked losses by down here. So it's all about understanding entry and exit points. So I hope you have a little understanding now. When the one candle closes and that the next candle makes a higher price from the previous close, it makes a green candle. And if the candle makes next hour or next time frame, for example, it's a H4 time frame, it makes a low, then it will be a red candle. Let's see the time frames. Time frames are like if you are imagine you are standing at the first floor of any building. If you're standing at first floor of the building, how far you can see? Your view is limited. Imagine similarly when you're looking at short time frame charts, 1 minute chart, 5 minute chart, 15-minute charts, or 1 hour chart. These are the short time frame charts. When you look at these charts, you have a smaller view of the market, which direction market can move on. But imagine if you're standing at 10th floor, then definitely your view is far better than the first floor. First floor was having a limited view, but at standing at the 10th floor, you have broader view. You can better understand which road is going which direction and easy for you to navigate. Similarly, the more higher time frame that you use, the more accurate understanding of the market you can have. For better understanding and better moves of the market, future moves or predictions, higher time frames are recommended, especially day one time frame is a standard and very widely accepted time frame all over the world. So when you need to look at for day traders, they normally look at day one time frame. There are different types of traders who are not going in that details, who will see in other coming lectures. So coming back to the point, if you are looking at 1 hour time frames, you have a limited view. If you move to H4 time frame, you have more better view of the market direction. And if you move to the day one, then definitely you can have much more understanding of the market moves. So let's practice on MT4 time frame, how the market moves at different time frames. For example, imagine it, we have M15 time frame. Now, when we click at M15 time frame, it means every candle is equal to 15 minutes. This candle is 15 minutes, this candle is 15 minutes, this candle is 15 minutes. If I bring my cursor here, then you can down here, then you can look carefully. This candle is starting at 6:15. The next is 18:30. The next is 18:45. There's a gap of 15 minutes between every single candle. Why? Because this one candle is based basically on 15 minutes time frame. So if we click at H1, now every candle is equal to 1 hour. Let's look at this one. This candle, this is the current BTC market are working right now. So it's showing time even at the bottom, 25th, 27 for 2025. It's 1 midnight, and the candle is uh, closing price, opening is at 1. This at 12. This candle at 23, 22, 21. So can you imagine? So this whole in chart is based on the one candle, 1 hour candle now. Whatever chart you are looking at now, whole chart is based on 1 hour. Every candle is showing just a 1 hour. How to open trades, when to open trades, we will see these things later. These are the secondary things. Where to enter, how to enter, we will study these things. Definitely, we will look into these patterns and we will be buying or selling. But right now, the basic focus is to understanding the time frames. And simply trust me or nothing else. We will be looking at these chart, then we will put, for example, buy or sell. We will do practice at the end of the session. We will take any live trade. So it's not difficult to do any trade. This is a 1 minute chart. Now imagine it. Every candle is 1 minute now. Now look, this candle closed here at this price, and after that the price is trying to, for example, move up. So far it will go down. I am expecting here a red candle or market should retest bit down, and then we will see. So this candle is basically is showing a 1 minute time frame. If we click at 5 minutes, this candle is based on 5 minutes now. 5 minutes candle, five, every single candle here is 5 minutes based on 5 minutes. Similarly, every candle here was 1 minute. Then let's going back to further 15 minutes time frame. 50, every candle becomes 15. If we click day, now every candle is based on one day. Look at the price at the bottom. Look, 26 now, 25, 24. So now every candle is basically showing one whole day activity. Are you getting my point now? For example, this is, if you look at the date, this is 3rd of 28th of March, 29th of March. This candle is 30th of March. Similarly, imagine this market closed here, next candle opened here, tested market down and then went up. Similarly, market is going up and then down again because the market closed here but actually could not sustain the value and market retested back. Then market again opened here, little bit tested down, could not sustain, made a wick and come back again. So in this way, market is keep moving up or down using red and green candles. So our basic challenge is to identify exact right times when to enter and when to exit. That we will study in the coming modules, and you will be trained enough to understanding the market behaviors and structures with time, and with every module you will be enhancing your knowledge. Right now your knowledge should be just to understand how these candles are formed, how these candles are working, why it's a green candle, why it's a red candle. I hope you have this concept now. When the market makes a new candle and that candle is higher than the previous close, it's make a green candle. If the next candle goes down and close down from the previous open, it makes a red candle. And other task is to understanding the time frames. There are only two tasks in today's module that I would like you to remember or to understand. Number one, how the charts are formed, why green and why red. Second objective is to understanding the time frames, that one time candle actually represent the selected time frame. Right now I'm selected H4. Now one candle becomes 4 hours activity. Let's draw two lines. Imagine it. This is a here. This is a 1 day candle. Let's move this candle. It's a 1 o'clock. It's actually closed here, this market. Okay. And then we take another, uh, we go back 24 hours. 19, 16, 7, 6, 5, 4, 3, 2, 1. This green candle. This green candle. Okay. So we draw a line here. This. Now this whole activity of 24 hours, 1 2 3 4 5 6 7 8 9 10 11 12 13 14 15 16 17 18 19 20 21 22 23 24. These 24 candles are showing 1 day. Let's look at it. Look, this whole activity is just shown between the two gaps. This is a 1 day gap. This is a 1 day candle, right? Started from here because this is the started very next second, so it's showing here. Similarly, if you go for H4, this candle is showing now. Are you getting this point now? So if you go to 15 minutes, then you will see your all 24 are based in this one. If you go for further down, so your all 5 minutes candles are making a 24 hours. Just if you go 1 minute, so every 1 minute is basically coming down between these two intervals. So this is 1 minute chart, 1 minute candles all together combined to make, for example, a day candle here. So when you select a 1 day time frame, then your one candle becomes a 1 day candle. When you select H4, your one candle becomes H4. I hope this point is clear now. So when, for example, you are entering at 15 minutes time frame, so your every candle will be based on 15 minutes now. Let's move on. Let's move back to our lecture. I hope this point is quite clear now, that the candle is basically based on the time frame. The candle size is based on the time selected time frame. If you select H1, your candle becomes 1 hour, shows 1 hour activity. If you select H4, this candle shows 4 hours activity. If you select day one, it means this one candle. Let's talk about this candle. This candle will completely show the one day activity. For example, the price opened on this day is 87,101. You can see at the right, this is the price scale. So this candle opened 87,000 and closed at 91,254. So this complete one day candle is showing what it is showing actually. Candle shows only the activity of the market. We actually shows the activity of the market through candles. Are you getting this point now? What are candles actually? What they are showing actually? They are simply just showing the price movement, the market moves in terms of candles. That's the only information that we get from the candles. So I hope time frames are clear now. Similarly, the comparison between bricks, when they are joined, they make wall. And these walls have some like patterns in the same way. When the candlesticks are joined, they make a chart. And these chart also have some patterns. So what's the challenge then? It looks simple, easy, right? So challenge is when to enter into the market. What is the right time to enter into the market? Anyone can enter into the market at any time. We will do this practice. When to exit from the market? When you exactly know this is the right time to book your profits and you should come out of the market instead of keep staying in the market and then you'll end up with the losses. That mostly people does without proper knowledge, without proper education. They don't know exactly when to enter and when to exit into the market. So these things will be trained in the coming modules. You will be having this edge above other traders, that exactly when to enter at a right time and when to exit at the right time. So it looks simple, right? As I mentioned already, it's a common sense stuff. If, for example, it's a buy thing and you're doing the selling thing, you will stop. Similarly, if it's a pull, you need to pull, not push. It's a common sense stuff. So trading, from my experience, is a very, very common sense stuff. No age, no experience. For example, education I'm talking about is much needed. If you have your common sense and you have proper trading knowledge, it's more than enough. So sounds easy, but actually it's not that really simple. It all comes with the knowledge. Again, as I mentioned, right time to enter and right time to exit, that comes with the education. It looks and sound easy, but actually you need training, you need proper trading platform and education to come to this level. So let's talk about the platforms now. There are different platforms. I prefer MT5, and mostly people all around the world they use MetaTrader 4 and MetaTrader 5. As I mentioned earlier, I am a software developer for this platform. I have developed my own softwares as well. So these apps are designed very these apps are very designed carefully and very user friendly. They are designed for beginners and for professionals as well. So they are really easy as a cup of tea. I will show you after how to open and how to close a trade. So anyone who can use Uber app, they can do trading, use this MT4 or MT5 platform without any issue. Even in the, if you have an experience with the Uber app, when if you are a driver and the ride comes up and start blinking on, then you need to select. Sometimes you need to have multiple stops. You need to check carefully that the ride that is coming is worth doing or not. Is it enough to pick the passenger from the mentioned distance? And what about the price? Is this price good enough to pick and drop for the whole one? Sometimes there are multiple stops in the one ride involved, and that involves too much pick and drop time. So there's so much considerations are there when you're picking up a ride in the Uber driver app. But on the other way around, at MT4 or during trading decisions, these things are not that complicated. They are very simple. You just need to analyze the market carefully using your knowledge. If you are comfortable, just enter by doing a one click. and if you want to exit, just cross and you are come out. We'll practice it now. So these I was saying these platforms are very user friendly, so don't worry, you don't need to have much knowledge. Very practice, no, very simple platform. Just simple get do registration with the uh, broker, download the MT4 or MT5 app, and then simple place order and manage your trades. You don't need to be as I mentioned, tech expert or into the trading stuff. It's very easy things. So let's test the MT5 platform. We will open and close the trade for you to understand that once you are trained enough, once you have a proper knowledge of the market, once you know when to enter, when to exit, then trading on the app or a platform is just like a piece of cake. Let's try it now. Imagine it. I will just do some open the trade here. We will see just market seems pushing the market down. So let's say we open the sell here. Now, what I did, just simply one click here. I just put the sell that I have, for example, market goes down and then your trade is open and you can show your profit or loss here on the right side. Very simple. Then if you want to put stop loss and take profit at what price, for example, your price exit, just click this line, hold it, click and hold and bring your cursor down. It will put your take profit here. For example, your $19, $27, you have already profit. If you want to close, simply close. Your trade is already closed. Within second, you have made $25. But if you are working in the other industries, for example, if you are a Uber driver or if you have any experience with the uh, warehouses or anything, even if you ever work on the minimum wage, you know that minimum wage is 11 point something in UK. After taxes, you are not saving much. But on the other way around, you just took few seconds and you have made straight away $28. This is the beauty of this market. Let's say again, it's again another sign we will study again in the market for the sell position. For example, we see here and we want to make some little profits. So we will study it later. I'm not putting now one issue two, or we will study these things. Right now, just showing the power of this market, the usage of this platform. Very simple. If you want to sell, place sell. If you want to place buy, open buy positions. You can open multiple position at the same time. If you place buy, it will open a buy position. If you put sell, it's simple. If you want to close a trade, one option is to you just cross here. Can you see? I hope you can see. If you just click cross, your trade will be closed. If you want to take profit, you put your arrow down, it will put your take profit. If you want this price to exit your profit automatically, you are not going to watch all day, all night. For example, you believe the at this price I'm not happy. Just take minus $78 and come out of the market, and market will automatically take you out from here. You want that the market gives you, for example, $57 profit. Once the market reach this level, the trade will be automatically closed, so you don't need to worry about it. So it's very easy and not that difficult, and you don't must not have that very high knowledge for this market to be trained. Your homework before continuing study 2, please create an account on the trading view. It's a website that offers you to analyze market, for example, Tesla, Amazon, other shares. Free basic account is free. No need to buy the paid account. Practice it. Watch 1 minute time frame, 5 minute time frame. See how candles are constructing on that time frames. Understand? So once you are familiar enough before taking the module 2, so you will be understanding what I'm doing in the module, because in module 2 we are going to touch the little higher things, and those concepts are completely based on your initial concept over the module 1. If you are not good in understanding the formation of the green candle and the red candle and the time frames, you will not be able to understand the module 2. So I highly recommend all of you, please study and practice the basic account, create account, Practice different time frames, and then you will understand how the charts are working in the market. So thank you so much for your time. I hope you have learned a lot, and please keep practicing it. And we will see you, and we'll continue module 2 very shortly. Take care. Bye bye.